The theory that nobody under the age of 35 is ever going to use Google ever again has to be put on hold after the company announced their Q1 earnings. Revenue coming in at $90 billion, 12% growth over the past year. The company also announcing a new dividend program where they've increased the existing dividend by 5%. Also, they are going to be buying back $70 billion worth of stock over the next several years. We'll dissect the financials over at this company. We'll look at Google Cloud, which grew 28% in the most recent quarter. We'll compare that to previous results. We'll look at all of the financials, including a balance sheet with $95 billion worth of cash. Tell you what, if you've got problems, $95 billion sure as hell ain't one. We are going to be talking about the cash flow statement as well, looking at the Capex or the data center spend of $17.2 billion. And then we'll also look at this one technically, as I am seeing shares of Google in the after hours climbing at the current time up about 4%. That's after shares rose 2.5% during the regular trade. Could we come up and retest the all-time highs on Google? Up over $200 per share. The chart will provide some clues, and we'll discuss all of that on today's video. What is going on, investors? Hopefully you guys are Googling. And if you've held shares of Google over the past year, it's gone sideways. So just up 1% year to date, though, like a lot of these stocks, down about 15%. It appears, at least in the shorter term time frame, this has created a great buying opportunity. I was also doing a video earlier today on IBM, and it is currently trading at a higher forward multiple. Even after this after hours gain with Google, IBM is trading at a higher multiple than both Google and Nvidia. This market has gotten completely wacky. And I tell you what, you need some guidance over at Equity Empire, the new place where I'm posting all my earnings videos, including all of the companies that you see here. I am not going to be posting earnings videos outside of the Mag 7 stocks here on YouTube. It's all going to go onto Equity Empire. There's a link down below. I think you guys will love what you're getting over there, getting multiple earnings videos per day during the earnings season and a lot more, including buy ratings, whereas 12 days ago, I sent out 7 buy ratings for 7 different stocks, and that was right when the market started to turn. Now, speaking of turning, Google reporting their Q1 earnings, $90 billion worth of revenue, 12% growth year over year, beat expectations by $1 billion. Those expectations was for, like right at $90 billion. The high end was for 90.5. So they came over and above that. So it does give us confidence as we look out into subsequent quarters that this kind of like low double digit, maybe high single digit growth rate should continue. And when you're doing basically $100 billion of revenue in a quarter, growing at 9%, there's absolutely nothing wrong in that. And then when we look at the financial profile at this company, it obviously is wildly profitable. Now, they continue to spend a lot on capital expenditures. There's been a lot of discussion and rumors and just really misplaced opinion as it relates to data center. There's some people thinking the AI trend in the data center spend is over or it's slowing down. I am seeing none of that. It doesn't matter who I'm talking to, whether it's a software engineer or a well-connected investor. Nobody's seeing any slowdown here, and Google's capital expenditures supports all of that. Now, I noted at the top that you do get a dividend over here, and I tell you what, at the current time, the yield that shows up on financial website, I mean, it's basically nothing. But if you're going to hold Google over 20 years, 25 years, this dividend is going to massively grow every single year. Probably for the next decade, you are going to get a pay increase, and they just increased your pay on the dividend by 5%. Imagine getting a 5% increase on your pay every single year for the next 10 years. That is what Google is going to do. So your dividend rate is rather small if you just bought the shares now, but over 25 years, that dividend compounds, and then the shares that you bought compounds again. Is a very powerful thing. In fact, I just recommended a dividend growth stock over on Equity Empire. It's not a software stock, but it has software-like type margins. And also in that dividend growth. If you're not into dividend growth and you're a young person, something that you should look into. Now, speaking of growth, we've got share repurchases. $70 billion for Google. They're going to buy back $70 billion worth of the stock at their discretion. It's unbelievable. Most companies aren't worth $70 billion. This company is going to buy back $70 billion. So you get the dividend and the buyback. It's obviously great if you are a shareholder, particularly a long-term one. YouTube, $8.1 billion up to nearly $9 billion. The other thing that stands out here is Google subscription. This is Google TV. I believe this is some Android and other type of subscriptions from 8.7 up to 10.4. Would love to see them break this out in the future. My guess is they'll be required from a regulatory standpoint to do that at some point. Would love to see the breakdown of the subscriptions. Is it Google Play? Is it YouTube TV? What's growing here? How profitable it is? Company obviously wants to hide that for competitive purposes. The advertising business over the last year, $61 billion up to $67 billion. Remember, there's a lot of people watching a video like this. You're using AI. You have OpenAI. You have Grok. You have Anthropic. But my gosh, there's a huge swath of the population that doesn't have any idea what those things are and are not using them. And Google would continue to be the entry window and entry door for a lot of people into the internet. They're obviously going to be layering on AI. They already are in the snippets of their search results, and you can see it here. Their ad load has increased on some search terms, but Google can turn up the switch. I buy tons of ads. I bought $500,000 just personally buying ads. It's my own money using Google. And I'm telling you what, I wish they would run my ads on more keywords and in more scenarios. For some reason, the company does it. So they have plenty of ways to pull the lever there. Here's Google Cloud. $12.3 billion worth of revenue, 9.6 in the previous quarter. Here's the most important thing about Google Cloud is you cross $2 billion of operating income. I remember doing these videos and it wasn't profitable. That has just turned profitable. And now you're growing your profit, which is represented here by operating income. You're more than doubling it year over year. So just absolutely fantastic pace as it relates to Google Cloud. Google Cloud's growth is probably good for Microsoft. It's certainly good for Amazon. The ad business also good to a lesser degree for both of those companies, but also Meta as well. This just gives you another view of the profit and loss, which we'll go through here more in depth. So $90 billion worth of revenue, or cost of revenue coming in at $36 billion. That's up, obviously. Research and development, they continue to spend money over here, but it's measured. $12 billion last year, $13.6 billion this year. Look at what they did. And this is what makes Google so remarkable. Sales and marketing spend last year, for $80 billion in revenue. Again, this is for a quarter. It's not for a full year. Okay. $6.4 billion. Sales and marketing went down in the quarter when you drove revenues higher by 12%. There's a lot of people calling for the demise of the Magnificent Seven, calling for the demise of stocks like Google, saying they're overvalued and this, that, and the other. There's very few companies in the world growing at double digits that can actually cut their marketing spend. You have to have a great product. Obviously, Google does. They continue to spend a little bit more in G&A in the most recent quarter. So your total cost and expenses went from 55 up to, we'll call that 59.6. That gave you income from operations of $30.6 billion. So you have 30% operating margins. In fact, slightly higher than that. Last year was $25 billion. Now, the company recognized other income of $11 billion in the most recent quarter, which gives you this very large net income number and a large EPS beat. This is why I stress, if you are not going to allow me to analyze these stocks for you and give you a guide and be your research analyst, stop at income from operations. Stop using EPS, stop using net income, because it factors in some stuff that just you don't really need to factor in. We'll get to the balance sheet here in a moment, but I did want to show you where that other income was. It was the gain on some equity securities. My guess is potentially this is Waymo. Potentially this is some of the other investments that the company has made. On paper, those rise, and so they have to recognize them, but it has nothing to do with actually operating the business, which there's nothing wrong with what's going on at Google. Now, speaking of nothing going on or nothing going wrong, they have $95 billion in cash. They had about the same this time last year. Total current assets sitting at 162 because you have $95 billion in cash. You have another $51 billion that people owe you. You have, other assets, whatever those are, at $15 billion. You've got some other stuff. And look, you do have some long-term debt, $10 billion, but, you could write a check for that and almost nobody would notice it. So obviously, wildly financially healthy company. Obviously, there's that DOJ case, which we won't discuss a lot here because, you never know how these court cases work out, whether it's a settlement or Google loses, but then they appeal and that lasts for years. You just never know how these things work out. Moving over to cash flows gives you a great insight into how well this company is doing financially. Obviously, we had that $34.6 billion worth of net income. But again, that was bolstered on the fact that they have to recognize gain on these equity securities. And that was at about $10 billion in the most recent quarter. Now, that's great on paper for Google. And if Waymo goes public or if some of their other bets go public, which wouldn't surprise me at all, well, they'll eventually realize this as something that actually hits the balance sheet. But right now, it's all on paper. So you come down here to net cash provided by your operating activities. So there's two ways to look at it. When these companies have these big paper gains, just focus on income from operations. This is just money operating Google, YouTube, Android, Google TV, the cloud business. This is what it is. That's what I would focus on. The other number you can focus on is your net cash provided by your operating activities, which came in at $36 billion. And we glaze over this because now I'm really just covering Mag 7 on this channel. But when I'm looking at all these other companies, and I see $36 billion of operating cash flow. Remind you that this is just for a single quarter. This is in 3 months. They're generating $12 billion of operating cash flow, not revenue, cash flow per month. This is unbelievable. So when people are chirping in your ear and on X and on Twitter and in these financial news sites that nobody's using Google anymore, just remember that they amidst all of that, they generated $12 billion of operating cash flow per month during that time frame. Okay. Now, property, plant, and equipment. There's a lot of talk about Capex and should these stocks cut back and this, that, and the other. No. When you have a cloud business growing at 28% and cross $2 billion of profitability, no, you actually probably should spend as much or even more than what the company is doing. And they spent $17.2 billion in the most recent quarter. I have a graph here showing you the acceleration there. But this is, when you're as profitable as Google is, this is very not manageable. They could triple this and it wouldn't really even matter financially. Again, the company has $100 billion of cash. So this Capex and these dorks that rely on financial metrics like free cash flow and they put it in a graph and they try to, look smart. It doesn't matter. Your cloud business is growing at 28% and it's profitable, wildly profitable. In fact, they more than doubled operating income. You should be pouring money into Google Cloud. Nobody should be worrying about this Capex spend. In fact, they should accelerate it. And all the numbers that we saw here, they will likely continue to accelerate. Now, the other things that they do with the operating cash flow, they buy back the stock, $15 billion in the most recent quarter. So that puts you on a pace of buying back $60 billion worth of the stock in a year, and they just announced a new $70 billion buyback. So they might use that whole 70 over the next year. It's really incredible. Now they continue to pay dividends. And this is why I'm talking about how the dividend growth could really accelerate over this company. In a quarter, you're only paying $2.4 billion of dividends. And so you can massively accelerate that when you're as financially healthy as this company. They issued some debt. They paid off some debt, basically a refinance there. And, look, things are, things are pretty good over at Google. Now, technically, we are still in an uptrend, and this is why you've got to really focus on the charts. Some of you watching this hate Donald Trump. Like he literally gives you, I say his name and you get queasy in your stomach, and that's perfectly fine. I don't care. What you have to focus on, though, is the stock chart. Stop focusing on the headlines. Stop focusing on all of this stuff that just doesn't matter and the day-to-day drama. And I would say just focus on that, like a 20-year price trend that is literally just gone in one direction for Google. We are at what I would say a buying area for Google. You're south of the middle of the channel. Anytime you're south of the middle of the channel, it is a buying opportunity. When you touch the bottom of the channel, that is a very, very strong buying opportunity. With stocks like Google, I wouldn't wait till you get all the way to the bottom, because you can see over the past 20 years or so, you've only touched it a handful of times. So unless you're watching this thing like a hawk, you might not get your opportunity to do that. That's why I set these channel lines in the middle, giving you an indication that you start buying when you've crossed over down to the middle. That's why Google has been a great buying opportunity, and that's why I've personally bought, I think, about $20,000 of Google on this move down. I will be experiencing the dividend growth rate over a long period of time. This absolutely belongs in your portfolio. The rumors and theories that people will not use Google search anymore is unfounded. You have a large segment of the population that will not download a third-party standalone AI app, and it's just not going to happen. Yes, you do have some breakup. You have Google Chrome, you have DOJ and all that stuff, but that is what you have to deal with when you're investing in big tech. The other thing that you have to deal with is a forward multiple on this one in the teens, and when you look across all of the stock market, there's no other investments out there that are trading in the teens in terms of forward multiples, still growing double digits, and then have a balance sheet that has $95 billion, $100 billion of cash, buying back $70 billion of the stock, increasing the dividend. Guys, this is as good as it gets. Investing is not complicated. You go out and buy Google whenever it dips. Hopefully you enjoyed today's video. Back again on Friday, tomorrow. Make sure you join us again on Friday, tomorrow, for the Fang Stock Recap Show, and make sure you go and subscribe to Equity Empire. This is where all my videos are going, and we've released several buy ratings when this market was in the dumps and everybody was panicking. We've released these buy ratings, and these stocks obviously are reacting because you can see the underlying financials and fundamentals of these stocks remain very, very, very strong. Hopefully you enjoyed today's video. See you again tomorrow for the recap show. Good luck with your investments.